Paul, it is an honor to have you on today on the Green Room. I genuinely, genuinely can't wait to dig into this episode with you. We've had a couple of conversations already, and this whole intersection of NFTs and carbon offsets, it just it just blows my mind, and I'm sure the audience is going to be ready to hear it, especially since I believe you guys just closed a brand new funding round.
Yeah, I am. I'm really excited about that. Oh, I just want to say I'm excited. This is like our third attempt at doing this because the first time you were sick, and then the second time I was sick. So we're finally making this happen. I'm really glad about that. We didn't give it to each other. Yeah, we are. Nori is announcing that we have just raised a $7 million funding round, being led by a really awesome venture fund called M13.
Okay.
Which I'm really excited about. And then also brought in some of our previous investors. We also had a really fantastic corporate investor from Toyota who chose to invest in this round, which is, I think, kind of, here's what's interesting about them. They're responsible as a company for 2% of all greenhouse gas emissions, not just
globally.
Auto manufacturers, globally. And they're investing out of a climate-specific fund at Toyota Ventures that's investing in companies that are going to be building carbon removal solutions, and we'll talk about that and how that could feed into our marketplace. So I'm really excited to have their backing in this as well.
That's insane, and congratulations, $7 million. That shows market signal that you guys are on a rocket ship growing. And I think everyone would that hasn't heard about Nori yet, that might be watching this episode, why don't you give a little bit of context on what Nori is, what you guys do, and maybe even a little bit of a quick background on yourself, because I know I want to dig into that a little bit more with you.
Yeah. Well, okay, I'll start with my background because it leads into it. I studied computer engineering in school, and when I was in grad school in 2010, I learned about Bitcoin for the first time. I had a professor who was teaching us about market trading stuff, and he used that as an example, and I was very much in a mindset of like Ron Paul, audit the Fed, monetary policy kind of wonkiness. And so I got really excited. I went home and read the white paper and was like, oh boy, this is this is the solution to a lot of different things. So I got really excited about crypto back then. And then I moved to Seattle. I was working mostly as a product manager at different agencies, building mobile apps for big Fortune 500 brands. And I got kind of bored with consulting. And in 2015, I started thinking about what I could work on and start that would be more impactful. And climate change seemed like kind of an obvious choice because, of course, more people are going to care about that in the future. And I thought it would attract a lot of really talented people to want to work with me. And because I'm an engineer, I was thinking about it from that sort of lens. And like climate change is a lot more straightforward than people really think it is. Like we've put too much carbon up in the air, right? So why don't we just pull all that carbon back out? That's it. That's the solution. That's the fix. We need to stop emitting or decarbonize as much as we can of the economy. But then we need to remove the rest, and we need to remove a lot of the past emissions that we've already put up there.
Absolutely.
It turns out that there are a lot of different ways to do so. More nature-based solutions like regenerative farming, storing carbon in soils, planting trees, kelp farming, blue carbon stuff. And then there are industrial applications like direct air capture and storing like carbon negative cement, construction materials, and that kind of thing. A lot of different ways, but none of these are happening at any reasonably useful scale yet. And so I started a meetup group in Seattle to meet other people interested in this, to find other co-founders. And what was kind of weird was we very quickly met basically every other group in the world that was working on this because there were only 3 or 4. And so this is very early days for carbon removal. And by the end of 2016, we started to realize that what I just described, that there are a lot of different ways to pull carbon out of the air. And what was missing is a financial incentive to do so. Because if we want to get a large amount of people to do something, then the easiest and fastest way to do that is to pay them. It was at the end of 2016 that we also started to see the rise of tokenization happening in the Ethereum space. And that was really the light bulb moment for me, that like, oh, here's this technology thing that I'm really passionate about, and have had these like two parallel tracks in my life for like 6 or 7 years. Why don't we put these together? Because we can create a tokenized economy that's built around incentivizing people to pull carbon out of the air. So that was kind of the genesis for what would eventually become Nori. In the summer of 2017, my co-founders and I pulled together a team of people, and we entered and won the Blockchain for Social Impact Hackathon, and we won. And then we decided to found the company.
Okay.
So what Nori is a carbon removal marketplace where buyers and sellers can transact in carbon removal that's been measured and verified through some pretty transparent processes. And we've been doing that for a few years. So that was 2017. The company's about 4 years old now. And we've basically proven our concept out. We've sold, I think, probably by the time this airs, about 60,000 tons of CO2, over 800, maybe $900,000 paid out to farmers for sequestering that carbon. And what we're working on next is the crypto piece. We've basically decided to get the carbon side of the business working first, and then we'll be launching this cryptocurrency to act as the price discovery mechanism, because I think that's actually really the most important piece of what we're doing.
Okay, so there's a lot to unpack in that story.
What thread do you want to pull on?
I think the most interesting thing to start with is a bit understanding as to why you need to exist. Because when we look at the carbon offsets market, or the voluntary offsets marketplace, or anything in this space, is generally really paper pencils still stuck in the early 2000s.
Yeah.
And sometimes you can argue that, hey, I guess there doesn't need to be efficiencies. But carbon offsets as a sector of climate has been ridiculed previously, and people are well aware of the challenges in this space. What specific problem are you guys pulling on? Because obviously you have companies like Pachama that verify that a tree is planting and actually sequestering carbon using their satellites. You have a group like Patch, which is providing automation in a sense for purchasing a carbon offset through APIs. Mm-hmm. Where does Nori play into in this large marketplace, or this umbrella that is classified as just carbon offsets marketplace? And what are you guys specifically focused on solving?
Well, there are three specific problems that we're trying to solve. And I would first start by saying that using the term carbon market is kind of a misnomer, because there is no such thing today. Okay. If we talk about other commodities, which carbon is and should be considered, there are pretty clear markets for them. Right. We know what the price of a bushel of corn or a barrel of oil is. And we know that because there are spot markets, and there are forward markets, and there are futures markets. And all of these prices are interacting with each other. And so it's pretty clear and straightforward to anyone who's working in the commodities industry to understand not only what the value of that product is today, but they could forecast and do analysis on what that's going to be like in the future. There is no such infrastructure for carbon today, and that's a real problem, because if we want to scale up the amount of supply of carbon removal available, which is the key constraint here, then that's the infrastructure that needs to be built and met. So let's break that down. No one knows what the price of carbon is or should be. And the reason that we don't know that is because the transactions that happen between buyers who are buying carbon offsets and project developers who are doing those are all happening in private ways. And so the way that this whole industry works and has evolved in the past is there are a handful of different registries that exist, like Verra, Gold Standard, Climate Action Reserve. They've been around for like 15 or 20 years or so. They're all nonprofits. Their revenue comes from fees that they charge on the supply side. So registration fees, listing fees, transaction fees, and often consulting fees, because many times there have to be custom protocols developed in order to do the measurement and verification of those projects. Okay. So if you're a project developer and you want to do carbon offsetting, you're looking at something like, it can range from $30,000 to $100,000 just to get your project listed. That's not including your CapEx or your OpEx for actually doing the project. So that's a big barrier to entry. And the ways that...
And that's before they get a customer signed up for...
Yeah. Yeah.
Okay.
Yeah. And in practice, so this has evolved over the last 15 or 20 years, and it's very bespoke. And so if you're a project developer doing that, you end up working with most of the time brokers who are going to help find buyers for you.
Okay.
And a lot of, like, an ideal scenario if you're a project developer is you find your buyer before you even do the project, and you get them to help finance all of this upfront cost. And then you engage in like a long-term, maybe 5, 10, 20-year offtake agreement with that long-term buyer. The buyer likes that because they're getting price predictability, they're getting supply predictability, but it's very bespoke and it's very expensive, and the transaction costs are extremely high. So only the deep-pocketed project developers and only very deep-pocketed buyers are able to transact. This does not scale. So if you look at a company like Microsoft, for instance, they've been buying offsets, I believe, since 2012. And the way that they would do that is they have an internal team, they would work with consultants, and then work with brokers who are going to source for them high quality offset projects, big air quotes. And one of the reasons that they're looking for quality is because as a buyer, you are not protected in any way from what you purchase. You bear all of the liability. So let's say you buy a forestry project, and like the way forestry projects work is they are ex ante. So you are saying, I'm going to plant this forest of trees in a forestation project, and then we're going to calculate out what's the total amount of carbon that we expect to be sequestered over the next 100 years, and then we're going to collapse that number down to 20 years, and then that's the credits that I'm going to generate. So 20 years of carbon credits for carbon that we expect to be stored in the future.
Okay. So it's buying futures.
So you sell that. Yeah. And, I mean, this is different depending on the type of offset. There are, I should back up, I guess, a little bit and say that there are offsets, there are avoidance and reduction projects that are avoiding and reducing future emissions. And then there are carbon removal projects that are removing past emissions that are already up in the air.
Got it.
Forestry is an example of a removal project. And what we do at Nori is removal and soil carbon sequestration. So if you're a buyer, you're a big company, enterprise, and you're buying forestry credits, what happens if in 25 years that forest burns down?
I guess you, as a buyer, now have to reinvest all the same dollars you did before to get... I guess you probably have to hire the verification agency, which is $100K, $30 to $100K. And you probably still have to front all the same amount of capital to... Unless the... Well, if the buyer's assuming all the risk, then technically they have to put up all the money to replant every single tree.
They just need to go buy new carbon. Yeah, they would probably not necessarily do it with the same project, but they would just, like, they're out of luck. Like, the carbon that they paid for is no longer sequestered. It's just lost. The way that these registries try to deal with that concept is they set aside a buffer pool. So X amount of carbon removed or sequestered, and then they'll take 20% of that and they'll put that into a buffer pool. And they'll say, if there's some sort of loss, then we'll retire new carbon credits on your behalf to make up for that. But if the loss is greater than 20%, then it's a total loss. So because of that risk, and I have been told this by sustainability directors at very large companies, that, like, their biggest concern is having some reporter show up and say, hey, did you know that the carbon that you paid for is no longer there? And this has happened lots of times. There have been many different high-profile pieces that have come out in the last few years around fraudulent or just misreported carbon offset projects. So that's a big fear that they have. There's the financial liability and there's the press liability. So if that's the case, then if you're going to be engaging in buying carbon offsets, is like a risky endeavor,
right?
Because would it? What's worse, the just not doing anything at all, or getting slammed in the press for greenwashing and pretending that you were doing something, like, because that's how they would characterize it. So if you're a big enterprise company, you have to put an enormous amount of effort into diligence on a project, which again adds up to significant transaction costs that make it so that these transactions do not happen at any large or significant scale. So that's a liability and insurance problem. And then there are the two other problems are, well, I already described the pricing problem, is that no one knows really what this price should be. And the third problem is a double counting issue. So the history of carbon credits is it goes back to like the Kyoto Protocol in 1997. So every country except for the U.S., every major country, signed up for this. And the idea was that developed countries would pay developing countries for their carbon assets, because it was an acknowledgement that like we're developed because we burned a lot of fossil fuels and generated all the energy to get to this point. So who are we to say to a developing country that, no, you're not allowed to use as much energy and reach the same, quality of living standards that we have. In practice, though, it ended up being private entities, organizations buying and selling carbon credits, and then countries just kind of taking credit for that at the top. And then in 2015, that all changed. So now with Paris, every single country has their own emissions reductions target, including the developing countries. And it is still the case today that every single carbon credit that has been sold across international borders has been counted more than once. So if a project happens in Brazil, like a forestry preservation project, and then that credit gets certified by one of the registries, and then it gets sold to a buyer in France, both Brazil and France count that as an emissions reduction. Brazil says, hey, this took place inside of our borders, so we get to count that. And then France says, yeah, but someone imported the credit, so we get to count that as well. And then the like really pernicious part is carbon credits can trade many times. And the intent was for creating a tradable commodity asset to deal with that pricing problem I was describing. Right. That's a good intention, but and then there's this concept in carbon markets of retirement of the carbon, which is to say, I'm going to take final credit for this. I'm never going to resell this. I'm going to tell the registry, which the registries are basically just a database of serial numbers that they get reported to manually. I'll tell the registry, I'm going to retire this and take final credit. But until that happens, the carbon credit is trading over and over and over again. And that actually creates a really painful accounting problem, because if you're trading that, does that mean if you already reported it for the year before, then that reported number is inaccurate, which is why it should be probably retired as soon as a single transaction occurs? Yes, I would agree with that. But politically, that doesn't happen. The solution to this is double entry bookkeeping. But they don't do it because basically Brazil has been blocking this at the international level. The next COP meeting, whenever this airs, it's either happening or happening soon or has happened recently, is like the question of how do you enforce Article 6 of the Paris Accord? It's been an open question since 2015, and they're at a political stalemate about it. Basically because Brazil is sitting on a mountain of carbon assets and they don't want to not get credit for it. But your conclusion is the same conclusion that we came to, which is to say, if we're going to be really serious about dealing with climate change and removing 1.5 trillion tons of CO2, which is what needs to happen in order to get back to 300 parts per million, then we should be designing our system so that every new dollar spent on carbon results in net new carbon coming out of the air, which means the carbon should be immediately retired. It should not be resold. And that should be enforced at like the protocol level, not just like giving the buyer the option to do it. No one should trade carbon. Let me repeat that very clearly. Carbon should not be traded, because it also exposes all sorts of opportunities for fraud. So there was an example of the Chicago Climate Exchange, which was a pretty large and decent attempt at building a soil carbon sequestration market about 10 to 15 years ago. And it was primarily Midwest farmers in the U.S. who were doing these regenerative practices. And what happened was you would get related entities who were doing off-book swaps with each other, where they're saying, okay, I'm going to sell you 100,000 tons at $1 a piece, but we're going to market to market on our books at whatever the prevailing market price is, so $14 or so. So we're telling the market that we're trading at $14 a ton, but we're actually only trading at $1 a ton. And this is happening off book. It's not transparent. Well, the market volume that analysts are looking at and that traders are looking at is false. This is cooking the books. And so the market eventually collapsed in on itself because there was not actual real significant demand at the prices that people thought there was. So there's a transparency issue here as well. So what we're doing is, you named a few companies that you could consider competitors or like future collaborators. It kind of depends on how you look at it. I think we're all we're all on team reversing climate change here. So like
everyone merges into the next Microsoft. How about that?
Sure. Yeah, and that's what we want to be. So, so what they're doing is they're figuring out different ways to transact in carbon, which is good. We're not trying to be just another carbon credit transaction company. Got it. Our real purpose and the thing that we're providing to the market is the transparent open source price discovery mechanism for this. So we're trying to build a global commodities market for carbon removal and building the carbon infrastructure that, or the financial infrastructure that makes it possible for large scale carbon removal. And then these other carbon companies like the ones you've named could just be transacting using the infrastructure that we've built. So we've gone to market. We've been around for 4 years. As I mentioned, we've gone to market by focusing on the carbon side of the business, proving out that we have the ability to measure and verify the carbon sold. And the product that we sell, the Nori Removal Ton or NRT, is, I mean, if you're a customer buying from Nori or Pachama or Patch, like, you're buying basically the same thing. I mean, we can like quibble over small details here, but like it's more or less the same thing.
Sure.
But what we're doing that's different is we don't work with the existing registries because we compete with them. Because we're saying like fundamentally their model does not work for scaling carbon removal. They put way too many fees on the supply side and they don't enforce immediate retirement. And they have no incentive to change that at all. So
you're replacing the registry.
Yes, we're replacing the registry. This should be an end-to-end solution where people who remove carbon can sell it through Nori. People who want to buy carbon can buy it through Nori. But we're also providing the commodities trading infrastructure and then leveraging like Web3 and DeFi tools for scale. So in our marketplace, what happens is the suppliers have to conform to a transparent methodology that we publish. And this is done in a generalizable way. So we're not doing like very specific custom protocols like the way the registries do. We're saying, here's a large scale, high level standard. If you can conform to this, then you're good. And then we'll do quantification will happen and then you'll pay for verification. But because of this like large scale thing, we're able to use software to dramatically reduce the cost that people have to pay for verification. So we've reduced the verification cost by like 90%. It's on a typical project basis with farmers, it's like $3,000 to $5,000.
Okay.
That's it. That's all that they pay. We don't charge them any fees. Our revenue comes from the demand side, where buyers are paying a 15% transaction fee for buying the NRTs. So that goes through quantification and then verification, where a third-party verifier who is accredited and whitelisted by us is doing an audit on the data that the suppliers provide to us. They sign off on that, and then we're able to issue the NRTs, and they can be sold to buyers. Today, that price being paid is set arbitrarily by the farmer. So we've been doing our go-to-market was like, let's get the carbon side working first and just have this arbitrary pricing. So it's been $15 per ton. You can go to nori.com/registry and you can look at every single transaction that's ever taken place. And you can see where in the world these have been retired. And then when buyers buy the NRTs, they have to tell us where they are retiring them. So going back to that double counting thing, and for Paris, it's trivially simple for us because the carbon gets retired immediately, and they have to tell us where it is. So that's the country that gets to take credit. Period. In the story.
So if it's a Brazilian forest that issued the NRT in this case, transacted on the Nori marketplace, because you're using, I'd assume, NFTs fundamentally for...
Yes, the NRT, the Nori removal ton, is actually an
Okay.
NFT that's recorded on chain. So it goes into the buyer's wallet and then is made non-transferable and is there
And
forever.
because of the...
Burned, basically.
So it's like a gas fee for those who are crypto nerds, like with Ethereum.
Sure. The transaction fee that
Yeah.
they pay for our revenue? Yeah.
So that ends up simplifying and making sure that that information is publicly available to everyone. Brazil, I assume, then in that case, could, in theory, be the transactor or the supplier of those carbon offsets, which means they can still generate revenue. Because individuals are purchasing it, but it's retired in Brazil. So I think I'm still trying to understand the demand side. So let's say I'm Microsoft or I'm some company, the impact. Let's say I want to go on the Nori marketplace and I want to now purchase an NRT, which is fundamentally an NFT. I'm trying to offset our carbon footprint for this year, and that means that equates to 15 NRTs that are coming from a reforestation effort in Brazil. At that point, I'd go online, I would purchase these 15 NRTs. Brazil would take credit for the carbon reduction, or would I, as the impact or Microsoft, at that point receive that, but it was retired in Brazil? So Brazil's...
No, it's retired wherever you are.
Okay, so the U.S. in this case would take credit.
We get to take credit. Yeah.
And Brazil receives cash compensation for creating that.
Well, not the country, but the
supplier.
I guess it counts in their GDP, but the supplier, which is typically a business.
Right, a private entity in Brazil that provided that supply.
Yeah.
Okay.
Yep.
So that makes actually a lot of sense, because it seems like the registries then might actually be the bottleneck in this marketplace.
Yeah. They are the problem. Yes, that is correct. And that's the issue. And then the thing is, like, there's a lot of attention on carbon right now, right? Like, there's enormous amounts of venture capital pouring into the space. We've got large scale policy groups at the international level, like the Task Force on Scaling Voluntary Carbon Markets. There's all this attention, but none of them are questioning the underlying fundamental problems or the bottlenecks that these registries put in place. Nori is the only company out there that is implementing this separation of the carbon and the tradable commodity asset. Like, that's the real solution to these problems. And so that's why it's so like our next milestone of launching the cryptocurrency and enabling the price discovery to happen through that is so critically important.
Got it. And so I understand now the registry issue, and it's an opportunity that you guys are capitalizing on, and I'm actually surprised no one else has taken a look at it. And it's amazing how that times up with the meteoric kind of popularity that crypto as a space or blockchain technology as a space has had recently. I think my major... Well, go ahead.
I think... I mean, the reason no one else is doing it is because it's really hard. Like, it's taken us 4 years to get to this point, right? And there are a lot of other... like, we don't have a direct competitor, but we have competition in different like lenses. And there are like lots of new crypto projects that are tokenizing existing carbon credits, but there's the carbon credits that are coming out of these registries. So they're always going to have a supply bottleneck.
Because the problem is the registry. It isn't necessarily crypto being used for the transaction. It's the registry.
Yeah, it's not about the sales channels. That's not the problem here. The problem is how the supply is generated, where the supply comes from, and how we remove barriers to entry for the supply.
Yeah, and because you're driving the price down, and I I believe you mentioned you're only focused on agriculture right now, or soil carbon
For
for
now.
now. Uh,
For now. So we're agnostic to different methods of removal. It's just that when it comes to, I mentioned that we're doing these like high level methodologies, and anyone, I mean, you can go to nori.com, I think /documents, and see the methodology that we use. It's all public. Soil carbon, like the TAM for this is like 5 billion tons per year that could be removed. It's enormous. Okay. And it also benefits from all the tailwinds of having the entire food and agriculture industry pushing in that direction as well. So that's a really good place to start. But we're agnostic. We want to support forestry and kelp farming and direct air capture and carbon negative cement and so on. We just don't have anything happening at any reasonable scale.
And it's also because you guys are the new verification entity. I believe you guys have to spend time, money, resources on developing a real verification process that the community would be willing to back.
Accept. Yes, that's precisely correct.
And if that's the case, then when we look into this space, because there's limited supply, regardless of how you look at it, because you can't resell these assets, is that how you are setting a price on these NFTs? Like, is it like going on OpenSea today and saying, oh, I want a CryptoPunk, and then everyone just bids like crazy until it sells at some point? Or is there a more complex financial system you built here to determine the actual price of that carbon?
There is something more complex.
Awesome.
So yeah, let's dig in. So what we're doing is creating a medium of exchange token.
Okay.
So we've separated. So there's the NRT, that's the carbon, and then there's the Nori token.
Okay.
And the price of one NRT will always be one Nori.
Okay.
But that Nori price will fluctuate based on supply and demand.
And how does that price fluctuation occur? So there's a limited amount of Nori, then, I imagine.
Yeah. That's right, yeah. So there'll be 500 million Nori minted in a pre-mine thing. And we describe in our white paper on our website, we wrote that white paper about 3 years ago. It's still mostly up to date. We have plans to publish some new materials about this. But basically 500 million that will continue to circulate. Think of the Nori, like if you hold a Nori, you have not paid for carbon yet. You're holding a gift card to buy carbon. When you do use it to buy an NRT, then the NRT comes to your wallet and is basically burned, and then the Nori is not burned. It goes to the supplier, the farmer in this case, and then the supplier could hold on to it if they think that the price will appreciate, or they could sell it. We've actually had farmers coming to us and saying, hey, there's so much hype around carbon markets right now. Can we just do the verification but then not sell my NRTs? Because I think they'll be worth more in the future. And our response is like, no, don't do that, because buyers care about buying more recent vintage carbon. Like there's always a vintage associated with carbon offsets. So they don't want to buy carbon from 10 years ago. They want to buy it from like right now or really recently. So if you're a farmer, you should, and you think the price will be higher in the future, you should sell your NRTs immediately and then just hold on to the Nori token. Just don't sell it yet. And then play that market. The interesting thing here is that we've also introduced an insurance mechanism or a warranty, which, as I was describing earlier, like if you're buying forestry credits and that forest burns down, just like you're screwed. In our case, what you're buying is one NRT. We're introducing a concept, and we're not the first ones to say this. NCX is also advocating for something like this, but a ton-year concept. So one NRT is 10 ton years. When you buy an NRT, Nori is providing a warranty that carbon will stay removed for at least 10 years. Now, it's not very likely that carbon would be released after 10 years, and I can describe why in a second, but like we'll actually back up a warranty. And those farmers have to continue verifying throughout this process. So what they're doing is they sign up for a 10-year contract that they're going to keep that carbon in the ground, and then they have to re-verify that every 3 years. at every verification event. Now they've been removing more carbon as well, and then they sign a new 10-year contract for those NRTs. So they're getting a continuous revenue stream every 3 years or so, and then they're continually incentivized to keep that carbon in the ground. So it starts out as 10 years of permanence, but it kind of ends up becoming 13 and then 16 and then 19 and so on. We believe that this is a fundamentally better design that is more likely to keep carbon in the ground than the current status quo. The way these registries do it is they just slap like a 100-year covenant on it and say, look, if you're going to sell these carbon credits, you got to keep that carbon out of the air for 100 years. How many businesses are you aware of today that are
still operating from 100
years old?
I think Walmart might be near the 100. Are they?
It's a teeny tiny number. Yeah. Not that many. So like on the face of it, we can see that this is kind of absurd. It also, especially for farmers, like trying to get farmers to commit to 100 years, it's hard enough to get them to commit to 10 years. So no, it's just not feasible. So the way that we do that warranty is when the farmer gets paid, say they remove 100 tons, so they sell 100 NRTs. They receive 100 Nori. And then some portion of those, say, this is a design thing that we haven't decided yet, and we'll be publishing this when
sure.
we do. But say 40% of the tokens are held back over that 10-year contract term.
Okay.
So they're like locked up, they're restricted, and then they'll vest into them as they continue to go through verification. If we discover at the next verification that there was some sort of carbon loss, whether intentionally or unintentionally or anything like that, we will claw back those restricted tokens and then use those to go buy new NRTs from some other supplier and deliver those to the original buyer. And it's important that we do this with a token and not with cash, because if the carbon price fluctuates over time, it doesn't matter with the token. One token always buys 1 ton. But if we were to hold back cash and then the carbon price were to increase in the future, then we wouldn't be able to buy as much carbon as we need.
Okay, and because the farmer is expecting these tokens each year to be issued once they pass verification, when those carbon offsets are purchased, if for whatever reason, natural disaster, or whatever it might be, and I'm sure there's a way for the supplier to probably buy insurance on their supply as well eventually. But
yeah, so the way that we do the measurement with soil is we're measuring how much carbon they're storing relative to what would have happened on that land if they had continued with conventional practices. Okay. So they're not necessarily punished for like a natural disaster like that. But we're rewarding the increase in incremental carbon stocks because of the practice changes that they made, which is the additionality test that people talk about.
So it's for whatever they have actually physically sequestered based on what would have happened that year. So in that sense, then that makes it even simpler in my eyes now. Effectively, what you're saying is, hey, these Nori tokens are always worth 1 ton. The token fluctuates in value because it's a limited pool of it, and the more and more people that want to buy these NRTs through your verification company, or Nori in this case, or the Nori marketplace. At this point, if there are more people that want to buy carbon offsets than there are Nori tokens, then the price of a Nori token is just going to skyrocket. But on the flip side, if the demand for carbon offsets reduces, then, which I guess is a win in a sense, if we get to that one edge case situation where everyone's like, yeah, we've already drawn everything down and we're clean. Not that utopia is coming, but in that event, then the price of a Nori token goes down. But because you guys are issuing these in tranches in a way to these suppliers, it provides you the leverage to now go to other alternative suppliers and draw that down. And because you're using crypto or blockchain in this sense, it provides the transparency to the public that, hey, here's how much has actually been drawn down every single year, so that you don't have the double counting issue, you don't have the resale issue, or the incorrect accounting or fraudulent practices that have happened in many previous marketplace attempts. So you're bringing in those benefits into the space, and that's how price is also being determined. That's fascinating. um,
Yeah.
I, I really, I'm really fascinated by specifically the strategy to replace the entire verification agency, more so than the side of trying to connect a supplier to a buyer. And the reason I'm trying to kind of dig on that a little bit more is what provides the additional trust. Because these verification agencies, they've been operating for, I don't know, what, 10, 20 years at least?
Yeah.
What provides Microsoft, or because now small, mid sized businesses are also getting into this space, what provides
Right.
anyone the trust saying that, hey, you know what, Nori is doing everything end to end. Yeah, I can read their white paper and so on and so forth. There's always that, there are objections and fear that people have of being the first one to try a new marketplace. What's giving
Yeah.
people that trust to decide that, hey, you know what, the old way isn't the way to go? We should be working with Paul and his team at Nori.
It's transparency. It's by far the most important thing in this space. You can't see carbon, you can't smell it, so we have to be able to model it and measure it in other ways. And this was a problem that we recognized when we got started. So I mentioned that hackathon that we did before we founded the company, and one of the assets that we produced for that was the first episode of our own podcast called Reversing Climate Change. So we recognized that there was going to need to be a lot of education in this space. And then one of the first things that we did in the spring of 2018 was we held a conference called Reversipalooza, where we brought together about 100 different, there were farmers and ranchers, scientists, sustainability directors, people just kind of generally interested in this space. And that was when we presented our vision for what we thought was possible. And by the way, this was before carbon removal became a thing that people talked about. That didn't happen until the fall of 18 when the IPCC report that mentioned it came out. So we were out there trying to say, like, hey guys, like, let's talk about carbon removal. This is a big deal and very possible. So we've been building a large and loyal community of people who are interested in this space and who have been following along. And a lot of times there have been several occasions where we've made big sales to big enterprise customers who started out where it was an individual inside that company who bought their own carbon from Nori. Maybe they were following along with the podcast. So it's like, sometimes I get asked the question, why do this differently from the registries, or like, why not get certified by the registries? And I'll say, well, there's really no difference between us. We do a lot of the same things. We publish our documents in a very similar way. They've just been around longer than we have. That's it. There are a number of different sort of gatekeepers that exist out there. These are different bodies that try to distill the complexities of this down for big enterprise customers to understand better. And we just engage with them and we show our work. So that's it. Yeah, just show your work.
It's that simple, isn't it? I mean, the thing that I kind of find interesting, especially with your recent fundraising round, is it seems like the market's starting to actually pay attention now. And the transparency question, we saw that with Pachama, with verification of forestry projects. We're now seeing with you and Nori the transparency side towards the actual transactions and verifications that are happening for right now, at least, agriculture or soil-based drawdown techniques. So it seems like that, as you kind of highlighted in the early part, is the biggest problem that you guys are addressing. What does success look like for you guys over the next year? And if you're a founder or an investor that's trying to get into this space and just wrap their head around all the moving parts, what do you think the opportunities are? What should we be keeping an eye out for? And what should we be watching for is really the broad question that I'd love to close on.
Over the next year or so, the next big milestone is getting the token launched and getting past the point where the price of the NRTs is being set arbitrarily and having it rather be set by like market-driven economics. And we're going to be growing a lot, so we should have by now a bunch of job descriptions up on our page. So go to nori.com/careers for anyone who's interested in that. The other sort of big thing will be figuring out how we create like a scalable process for adding new methodologies. Like, we basically want people to propose methodologies to us. So we're trying to take like open source software thinking to this and saying, we'll have people propose them to us, and then we'll put them through some sort of peer review process. We do have an oversight board who different experts in different fields who are kind of reviewing these things as they come in. And then we'll start adding additional methodologies beyond just soil carbon as well. So for people who want to get involved in the space, I would say a lot of different ways. If you're coming from like a Web3 DeFi background, there's a lot to dig into there when it comes to the Nori token and how that creates incentives for carbon removal. If you are coming from like a hard science background, well, like start a carbon removal company. There are lots of different ways to do it, and like if we're successful, then we should be making it much more clear. And like, if you want to start a carbon removal company today, it's really difficult to forecast and do analysis on like what your potential return could be in the future. Like, how do you plan ahead for what price you could receive for selling your carbon products? Right. We want to make that simpler and more transparent for them. Yeah, that's what I would say. The next year will be fun and exciting. Over the next like 5 to 10 years, I would say our objectives are just to see more and more carbon being transacted through Nori. So getting to the point of millions, tens of millions, hundreds of millions, and getting to that first like billion tons, I think is a realistic goal over the next decade or so. Going beyond just Nori at like a planetary scale, like really people should be, if I can soapbox for a moment, I think people put way too much emphasis on the concept of permanence, which is like how long the carbon is going to come out of the air. That's not the problem. I would so much rather remove 100 million tons for 10 years than I would 10 million tons for 100 years.
Because speed's the name of the game.
Because the carbon speed is speed is exactly it. The carbon problem is today, not in 100 years. So at a planetary scale, we need to be building like a metaphorical carbon removal factory that's capable of removing between 50 to 100 billion tons of CO2 every single year. And that need is never going to go away either. We're never going to fully decarbonize. Like, the energy density of fossil fuels is too useful. So we just need to get to a point where we reach some sort of like happy equilibrium, and we're just more or less like gardening the carbon cycle for forever, and that's I think very achievable within this century. So that's where we're trying to get to. And
I don't think it can be put any way better, purely because we're trying to solve problems that we need to resolve by 2035, 2040 worst case, which means we have to scale up solutions that are ready to scale today, not something ready to scale in 10 years. Not that we shouldn't be investing in those as well, but
they'll all come along.
It's got to be an all hands on deck kind of solution where we're prioritizing the quickest impact. We got to treat this like a startup. That's what we got to do. The MVP is shipping and starting to draw down carbon today, not 10 years from now.
So when you put it that way, it's really a coordination problem, right? Like, climate change has always been a coordination problem. And from a Hayekian perspective, what's the best way to coordinate people? Price. Prices are information, and that's what makes the economy run. So that's why what we're doing is fundamentally building the price discovery mechanism. That is the most important missing piece in here. And in order to do so, we have to go beyond and disrupt the registries and everything that I just described. Like, that's the most important.
Yeah, because if there's no way to define what the price is, then no one knows what the point of building or doing their carbon reduction process or drawdown project actually is worth. And yeah, we can find ways to repurpose captured carbon, like what 12 or Opus 12 is now 12. Like they're doing with direct air capture, or there's, small nonprofits that are starting to grow that that are working on biomass storage, and then you mentioned kelp. All of these are great technologies or approaches or solutions that might actually draw down carbon that's significant enough, but if they don't know what they're getting in return for capturing that carbon, there's almost no reason to do it, or you're just not going to get investment from anyone unless there's a happy-go-lucky billionaire that's wanting to donate a ton of money to you.
Exactly. What we're trying to do is build systems that invites more and more capital into the space, because that's what's missing. And the more capital there is, the more opportunity there is for profit, and the more opportunity there is for profit, the more carbon that's going to get removed, and the faster we solve this problem.
It's solving the marketplace question. You're making it easy for supply to enter in because the demand is there. All the major corporations are globally looking to make purchases. It's just at this point in time, we need more supply entering into the market, and we need a fair price put on those pieces or on those carbon assets or those drawdown assets that are being introduced. I'm excited, man. I'm excited to see where this thing goes. I guess then in closing, I want to give you the platform to be as selfish as you would like. I would love for you to shout out your podcast, job opportunities. You've already touched on those things, but the floor is yours. If anyone wanted to follow along further, follow or reach out to Nori for jobs, customer, whatever it might be, what should people do? Because you've educated me at least, and I hope a couple of people in the audience at least.
Good. So we have 2 podcasts. The first one is called Reversing Climate Change, and that's more of a longer form interview format with different people working in the space around carbon removal. And then the other one is called Carbon Removal Newsroom, which is more current events based and is kind of a panel discussion around like what's happening in the latest in carbon removal. You can find us on Twitter at Nori, Nori, and you can follow me at Paul Gambill, PaulGambill, where I'm often talking about the intersection of crypto and climate change and all the fun stuff that's happening there. And then check out our blog, because we publish a lot. There is a lot of content out there. We're very much a publishing culture here at Nori.
Beautiful.
And then lastly, if this stuff is interesting to you, if you want to be part of the team you want to be a Nori Naut and you want to be part of the team that's helping reverse climate change, go to nori.com/careers. We should have a bunch of job posts up there now, ranging from, like, we definitely need a lot of engineers, but there's some leadership level positions. There's some more entry level positions. So go take a look at nori.com/careers.
Beautiful.
And I'll leave
awesome. Nori Knots. I hope that's the sales pitch that gets everyone in. Not the all good climate stuff, but Nori Knots. I want that title now.
Yeah, we give everyone like a big helmet when you walk in the door. No, we don't. We don't actually do that.
Great use of funds. But with that being said, Paul, thank you so much for coming on, and I can't wait to have you in the future as Nori continues to blow up the entire verification space and actually deliver a real climate impact.
Well, thanks for having me. This was a lot of fun.